Imagine waking up this morning, opening your chart, and seeing XRP sitting right on the edge of a line that could decide everything. One more candle in the wrong direction, and months of bullish momentum could unravel, but one surge of buying power and XRP could be on its way to rewriting history, smashing through levels that traders have been watching for years. This isn't just another daily fluctuation. Today's technical setup could define XRP's entire trajectory going into the rest of 2025. Whales are moving, liquidity is tightening, and every indicator is flashing some bullish, some dangerously bearish. So what happens next? Could XRP explode past resistance and finally reclaim the kind of highs retail holders have been waiting for, or is this the perfect setup for a brutal bull trap that leaves traders wrecked? Stay with me, because in the next few minutes, we're going deep into the charts, the signals, and the scenarios that could shape XRP's next massive move. Today, XRP's technical chart is screaming with tension. And if you've been in crypto long enough, you know that these moments, the ones where the indicators align, where the whales position themselves, and where market sentiment splits in two, are the ones that create life-changing moves. Let's start with the daily chart. Right now, XRP is pressing against a key resistance level at around $3.13. This level isn't random. It's been tested multiple times in the past, acting first as support during bullish runs, then flipping into resistance during sell-offs in technical analysis. These areas are often called battle zones, and that's exactly what they are. Every time XRP has approached this level in the last 18 months, the outcome has decided whether the price would rocket higher or bleed lower. But here's the kicker. Today, XRP is not approaching it weekly. Momentum indicators are showing strength. The relative strength index is sitting just below 70, meaning XRP is flirting with overbought territory, but not quite there yet. Traders call this the sweet spot, where a rally still has fuel, but hasn't yet tipped into exhaustion. Now, overlaying the moving averages, we see something even more interesting. The 50-day moving average is crossing above the 200-day moving average, what's called the golden cross. In traditional markets, the golden cross is one of the most powerful bullish signals, often preceding strong multi-month rallies in crypto. With its volatility, it's not always guaranteed, but history shows that when XRP has formed this setup before, massive price expansions followed. Let's rewind to 2017. Back then, XRP flashed a golden cross just weeks before it exploded into one of the most legendary rallies in crypto history, shooting from pennies to over $3 in a matter of months. Fast forward to today, and we're seeing an eerily similar structure forming on the charts. The question is, will history repeat itself, or has the game changed? Now let's dig deeper into volume, because price action without volume is like a car without fuel. Right now, XRP volume is surging during green candles and thinning out during red ones. That means buyers are driving the momentum, while sellers are failing to match the pressure. This is exactly the kind of structure traders want to see before a breakout. But there's a catch. Whale wallets, addresses holding millions of XRP, have been active in the past 48 hours. Blockchain data shows several large transfers from private wallets to exchanges, a move often interpreted as whales preparing to sell. On the flip side, other large holders are accumulating at levels just below $3. This creates a split picture. While some whales may be preparing to take profit, others are betting big that XRP is about to make its next leg higher. So what about support levels if things don't go according to plan? Right now, the first line of defense sits at around $2.80. This level has been tested multiple times in recent weeks, holding firm despite increased volatility. If $2.80 breaks, the next major support is closer to $2.50, a level that aligns with the 200-day moving average. Traders call this the do or die zone. Lose it, and the bullish structure collapses, opening the door to a deeper correction. On the flip side, if XRP can break above $3.13 and hold it as support, the path higher opens dramatically. The next target, around $3.50 to $3.70, where previous wicks have stalled out. Beyond that, XRP could quickly reclaim $4, a psychological barrier that would ignite retail FOMO and potentially trigger a fresh wave of buying pressure. Now, let's zoom out, because technical analysis isn't just about lines and indicators. It's about context. The broader crypto market is showing mixed signals. Bitcoin is consolidating near $64,000, and Ethereum is trying to break back above $3,500. All coins, in general, are chopping sideways. But history shows that when Bitcoin consolidates, it creates room for all coins like XRP to shine. But there's a wild card here: macro factors. Jerome Powell and the Federal Reserve remain front and center. With inflation cooling, markets are pricing in the possibility of a rate cut later this year. That's bullish for risk assets across the board, including crypto. When liquidity floods back into the system, high beta assets like XRP tend to outperform. At the same time, regulatory clarity is finally creeping into the picture. The Ripple versus SEC battle, while not fully behind us, has reached a stage where institutions are feeling more comfortable stepping in. That means technical setups aren't happening in a vacuum. They're being reinforced by real-world catalysts, and this is why today's analysis carries so much weight. Now, let's talk about breakout scenarios. Imagine XRP smashing through $3.13 with strong volume. Whales that were holding back suddenly flip bullish. Retail traders jump in, and algo trading bots pick up the breakout signal. Price shoots to $3.50 in a matter of hours. Headlines scream XRP breakout, and social media lights up with calls for $5 if momentum sustains. XRP could very well revisit $4 before the month is out. But there's also the bull trap scenario. XRP pokes above $3.13, pulls in retail buyers, and then whales dump into the liquidity. Price crashes back below $3, shaking out weak hands and resetting the chart. This would be brutal in the short term, but it could also set up an even stronger rally later, because once those hands are shaken out, the only ones left are the committed buyers. And this brings us back to the million-dollar question: what should XRP holders do right now? The truth is, technical analysis doesn't predict the future, it maps probabilities. And today, those probabilities are split between one of the biggest breakouts of the year and a painful correction. When we zoom out to the weekly chart, XRP is forming a massive consolidation triangle that dates back nearly 2 years. We are at the very tip of that triangle right now. And history shows that when XRP breaks out of these long consolidations, the moves are explosive. The last time we saw a setup like this, XRP went parabolic. So the real question isn't whether XRP will move, it's when, and if the charts are right, we might be just days away from that answer. So what happens next? Will XRP break free from its $3.13 chains and rocket toward $5? Or are we staring down the barrel of the perfect bull trap?